Oliver Slope, Blue Line Futures, joins us here this morning. What's the mood like so far, Oliver? What's the word on the floor? What's the big news here that's driving these markets the way they are today?
Well, last night on the open and this morning on the floor open, there was a consensus sigh of relief. Obviously, there was a lot of risk off in selling into the weekend, and you typically get that with the 2 days of uncertainty, what headlines could possibly come. Obviously, the big fear is the coronavirus in China spreading. That didn't really seem to spread into other countries as much as some were maybe fearful of. So you're seeing the market kind of regain some footing here. For that corn market, though, we're relatively neutral. We're not necessarily bullish, and this isn't a binary situation. Just because we're not bullish doesn't mean we're bearish. We're more or less just waiting for new information as we linger in the middle of a range. Last week we did mark lower highs, which is a little bit of a concern. 384 to 387 is a pocket that the bulls must get back out above. A failure to do so could break us below this low end of the range, 375 to 377. There's not a whole lot more of support until you get to those contract lows near 365.
Okay, what about this soybean market? You know, we started out with that little bit of a strength this morning, a burst right out of the gate. It fell back, but now it's starting to fight a little bit more strength here. And that's despite that we still have quite a big crop coming out of South America.
Yeah, soybeans obviously, I think, took the brunt of the heat last week, and it was just kind of a waterfall effect, and I think you saw some forced liquidation as well, and so you're starting to see a little bit of relief, but I think this is probably just going to be a relief rally in the near term. 875 to 880 is a pocket that we're looking at. If we get out above there, potentially we make a run back towards $9. There is a little bit of a seasonal here, a shorter-term seasonal from February 1st to February 15th. Soybeans have managed to rally 12 out of the last 15 years, so a silver lining there to start this week's trade.
I've just got a few seconds left here, but I do want to get your thoughts on this Minneapolis wheat market.
The wheat market, you know, we're looking to sell rallies, and Chicago's been the contract that we've been trading mostly. That's where a lot of the volume is. We held the trend line support from the contract lows, 50-day moving average, as well as a key retracement, 542 to 545. We'd be looking to sell again upwards towards 565.
Sounds good. All right, we'll have more. We're going to talk about the livestock trade. Stay with us. That's straight ahead right here on the Marketing Report.